Price action trading for beginners. Master the basics and strategies. In this video, you'll learn how to identify market structures even if you have almost zero knowledge of charts, how to detect new trends and trend reversals with pinpoint accuracy, a simple price action trading strategy that works without the aid of technical indicators. Let's get started, and don't forget to like this video. Higher highs and higher lows. Higher highs are peaks on your chart that are higher than the previous peak. On the other hand, higher lows are bottoms on your chart that are higher than the previous bottom. When exactly do I know if it's a valid higher high or a valid higher low? Good question. I want you to pay attention because this is going to be very important. If the market exceeds the previous high and then closes, then you can consider it the current higher high. If the market is currently on a decline but has not exceeded its previous higher low, then you can consider it the current higher low. But the question is, what if the current higher low goes below the previous higher low? The answer is that the market structure has now been broken and would now be called a lower low. Lower lows and lower highs. In contrast to the previous market structures, lower lows are bottoms on your chart that are lower than the previous bottoms. On the other hand, lower highs are peaks on your chart that are lower than the previous peak. However, new lower lows can also happen once they exceed below higher lows. On the other hand, lower highs can repeatedly happen even though no new lower lows are made. Take a look at this chart and see if you can identify each one. I will give you 10 seconds. You finished? If so, then let's compare it to what I see right now. Market conditions. What are they, when to define them, and when do they end? An uptrend consists of higher highs and higher lows. A downtrend consists of lower highs and lower lows. Finally, a range is when the price is contained between the highs and lows. Uptrend. In terms of market structure, a valid uptrend is when the price makes a second higher high, which indicates that price can potentially go higher. While an uptrend is invalidated once the price exceeds and closes below the higher low, therefore making a new lower low, which indicates that the price can potentially go lower. Downtrend. If you look at the previous chart example, is it already a valid downtrend? The answer is no, because unless the price makes a second lower low, there's a chance that the price can reverse back and make a false breakout. But once it makes a second lower low, it will indicate that the price can potentially head lower. On the other hand, a downtrend is invalidated when the price exceeds and closes above the lower high, therefore making a new higher high, which indicates that the price can potentially go higher. Range. A range is when the price is stuck in between the highs and lows. Nonetheless, a range can be considered valid if it retests the previous high and low once, and vice versa. So, when is a range invalidated? It's similar to how we confirm trends when it makes a second higher high to confirm a new trend, for example. A simple price action trading strategy that works in any market conditions. Trend. Looking at the example below, you can see that CADJPY on the daily time frame is in a valid uptrend as it makes its second higher high. Area of value. Since we are looking for the area of value, you'd want to wait for the price to go down and retest the previous higher high. Entries. Of course, you do have the option to place an automatic buy limit order. However, you'd want to see a strong candlestick rejection to avoid this from happening. I'm sure there are many candlesticks to learn, but the truth is you only need to focus on how large the body of a candle is relative to previous candlesticks. You're waiting for a candlestick with a large body as a confirmation to enter the trade. So going back to our example, your entry trigger would be here. Exits. The most reasonable place to set your take profits is before selling pressure kicks in, which is usually before the previous high. Because if you set your targets too high, there's a high chance the market will smell your take profit and start going against you. At the same time, you'll want to give room when setting your stop loss to avoid being stopped out prematurely. Learning how to read price action takes time and practice, and even after you've gained the skill of reading price action, there will still be times where the market structure is hard to read. Now here's what I want to know. What are some tips you could give to a beginner on how to read price action? Let me know your thoughts in the comments below.